Hi there. This is the last part of this lesson where we are learning how to analyze different types of cash flows. So we covered so far three of them: the generic way of analyzing a series of cash flows, random one, different positive, negative cash flows at different times, and then we start seeing patterns in typical cash flows. So the uniform series representing like fixed maintenance costs over years, and then gradient series of cash flows. So we represent increases that happen of costs or revenue over time, and so with a fixed amount. And we'll see the geometric series. So geometric series is similar in some way to the gradient series, that the cash flow amount increases from a year to a year, but with a fixed percent. So A2 would equal to A1, but plus an increase of it by percent J. So this formula here is generically kind of presenting how this series is represented. So A at time t, a value of cash flow at time t, is equal to the cash flow in the year before it times 1 plus J. So J is the percent of increase in that cash flow. It's not increased because of the time value of money. It's because instead of me depositing $100 in the previous year, in this year I will increase it by 10%. It will be $110. So that's the key here. One thing to note here, that at the end of year n, you had n-1 increases because you start with this known value A1. Unlike the gradient, you start with 0. Here you start with a value known to be A1. So now we'll start analyzing this cash flow so we can calculate the present worth and other type of worth values for the cash flow. The first one is present worth. So I'm converting that cash flow to its equivalent simple one, present single sum cash flow at time 0. This is the formula for it. So you see now it's not a function of only I. There's J here. So it's a very ugly formula. I don't mind using tables for that, especially that one. But one thing here to note is that this formula is only valid for I not equal to J. If you have I equal to J, then this is the format used. And of course, now we're dealing with a completely different set of factors. So if I want to calculate the present worth of a geometric series, I represent the geometric series with its first cash flow, which is A1. So it's P given A1. And then you have two percentage values, I and J, and then N is the number of years or period in that series. Now we're dealing here with different type of pages. So we're dealing here with completely different pages than the interest tables used for P given F, F given P, P given A, and all the uniform series factors, and the gradient. Geometric has its own set of pages. So here we have this page representing the interest. And then for every page, you will have different values of J. And you're given here, this whole page is just one factor, which is P given A. So you need to read first the page, so you know what type of interest you're dealing with. Pick the page, and then see what J will be the column here, and then the row will be the N. And this whole page is giving you P given A values for different I, J, and N values. If the factor is not listed, then I recommend using then the ugly formula we have. So let's see this example. This firm here is purchasing a new machine. Maintenance costs increase 6% per year. So that's not a time value of money. It's the amount of increase of the maintenance from year to year. And initial maintenance cost is expected to be 1,000. Now this is the time value of money. The interest is 10%. What is the present worth of this if the machine will live for 15 years? So that will be the kind of the cash flow. A1 here is equal to 1,000. I is 10%, J is 6%, N is 15. Question is, what's P? So that's a straightforward problem. Just P is equal to A1. I have it here. Probably this is not the correct cash flow. It should be the other way, flipped, negatives. So it's negative 1,000 times P given A, 1, 10%, 6%, and 15. We're lucky to have exactly this configuration of I and J and N. So we had it from the table to be 10.65708 multiplied by A1. This is the present worth of this cash flow. Another example, so Julian here wants to invest that amount in a gas drilling project. The net revenue will be this in the first year, 25,000. Each year the business will grow and it's expected to grow at 10%, and the revenue also will grow. If his time value of money is 12%, what's the present worth of this investment over a 20 years period? One thing here is the investment is not increasing, actually, it's decreasing. So the cash flow will look something like that. A1 is equal to 25,000, but J is actually negative 10%. Now, I can say now that my cash flow is equal to, like at time 0 here, you actually have negative 100,000. So I'm not showing here the initial investment. So negative 100,000. And then you have the returns here, starting with 25,000 and then decreasing. Now this factor is not in the table, so now we have to use the formula. So the formula, you plug in J with negative value, which is negative 10%, so negative 0.1. And if you use the formula, plug in the values, you end up with this the present worth of this investment is positive 12,204. And like we discussed before in the previous video, a positive worth, either present, future, annual. If this worth is positive, then you actually have a good investment, because your return, the return of that investment, is more than your time value of money. I can also convert that geometric cash flow into a future worth. So this is the formula for it. F is equal to A1, representing the geometric, times this formula. If it's only valid for I and J with no equal values. If they have equal values, then we will use this formula here. I can represent, instead of the formula, the factor as F given A1, I, J, and N. One thing to note here for that is like funny observation. If you flip an I and J, it will give you the same factor value. So if I is 5%, J is 10%. If I flip it, I is 10%, J is 5%. The factors will be the same value. There will be different pages for now F given A1, but the same structure. Interest value for the page, the columns are J, and the rows are N. If you don't have the exact values for I, J, and N, use the formulas. So this is an example here. Maddie deposits her annual bonus here that pays 6%. So that's the interest rate or time value of money. Her annual bonus is expected to increase by 10%. If her initial deposit, which is A1 here, is 500, how much will be in her account immediately after the 10th deposit? So it's the future worth. This is a very straightforward problem. F is equal to A1 times F given A1. 6%, 10%, and 10. We're lucky to find that in the tables. If you check the tables that I post in the class, you'll find this factor will be around 20. So she will end up with $10,000 in her account. Of course, that's negative because her deposits is a negative amount. So this curve here, this cash flows should be actually the other way flipped. It actually should be negative cash flow. So that's a summary at the end of this lesson, four video kind of parts lesson. This table summarizes all the factors we covered to analyze the different types of cash flow: single sum, uniform series, gradient, and geometric. Thanks for watching and enjoy your time.